All right, so let's dive into this mountain of research you sent my way about dividend investing.
Yeah,
Looks like you're really trying to figure out this whole passive income thing.
for sure.
And dividends seem to have caught your eye.
You got it.
So we've got articles, research papers, even some podcast excerpts here.
Yeah, it's a lot.
What are some of the big things we should focus on to help our listeners make sense of it all?
Okay, well, before we get into all the specific numbers and stuff,
Right.
it's important to understand what dividend investing is really all about.
Okay.
It's not just about getting those checks,
Right.
It's about owning part of a company
Yeah.
that's sharing its profits with you consistently.
So it's more of a partnership then,
Exactly.
not just a quick way to make money.
Exactly. And that's why it's so important to look at the financials.
Yeah.
Those YouTube videos you sent mentioned some key things to watch for.
Yeah.
But let's dig a little deeper.
Okay.
For example, everyone loves talking about dividend yield. But a high yield doesn't always mean everything's great, does it?
That's what I noticed too.
Uh-huh.
Some of these articles are saying you shouldn't just go for the biggest yields.
Right?
So what are some warning signs people should be looking for?
Okay, so think about it this way.
Okay.
A company might have a super high yield
Right.
because its stock price has completely tanked. That could be a sign of trouble, not a good deal.
So it's like a big red flag
Yeah, like a warning sign.
telling you to look closer.
Exactly.
Yeah.
You need to understand why that yield is so high.
Mm-hmm.
Is the company having problems?
Right.
Are they cutting costs in other areas
Yeah.
just to keep paying those dividends?
Right.
That's where looking at the dividend history and payout ratio becomes really important.
Okay, let's talk about those.
Yeah.
The YouTube videos were really into finding companies that have been paying dividends consistently.
Yeah, for a long time.
Ideally, ones that are increasing those payments over time.
Yeah.
What are some of the details there that our listeners should keep in mind?
Okay, so consistency is key.
Yeah.
But it's not just about the fact that they increase them every year.
Right.
The rate of growth really matters too.
Okay.
That's where this thing called dividend CAGR comes in.
Dividend KGR.
Yeah, the compounded annual growth rate.
Gotcha. You're right.
Yeah.
One of the research papers mentioned that a company could increase its dividend by a penny each year.
Right.
But that's not even keeping up with inflation.
Exactly. And you also have to think about the overall financial health of the company.
Yeah, that makes sense.
That's where the payout ratio is important.
Okay.
It tells us what percentage of their earnings are being used for dividends.
And if that's really high,
Yeah.
could that be a sign that they're pushing it too far?
It could be, yeah.
Okay.
But it really depends on what industry they're in. Like REITs, for example.
All right.
They have to pay out a big chunk of their earnings as dividends.
Oh, I see.
So a high payout ratio for a REIT might be normal.
Okay.
But for a different kind of company, it could be a red flag.
So context is really important.
It's everything.
The YouTube videos also talked about free cash flow,
Yes.
saying it's like the lifeblood of dividend payments.
It is.
I thought that was a good way to put it.
It's a crucial thing to understand.
Yeah.
Dividends ultimately come from free cash flow.
Right.
The money a company has left after covering all its expenses and investments.
And there's that trade-off we talked about earlier.
Yeah,
A company can use that free cash flow for a lot of things.
exactly.
Reinvest in the business,
Yeah.
buy back shares, pay down debt,
Mm-hmm.
make acquisitions, or pay dividends.
Right. They have options.
So some investors say
Yeah.
if a company's obsessed with paying dividends,
Yeah.
maybe they're not focusing enough on growth.
That's the argument. Yeah.
They'd rather see that cash reinvested
Mm-hmm.
to boost future earnings,
Right.
which could lead to even bigger dividends later on.
Exactly.
It's an interesting debate.
It is.
But it seems like understanding how a company manages its free cash flow
Yeah.
can tell you a lot about their priorities
Mm-hmm.
and what their long-term strategy is.
Absolutely.
And you can figure that out
Yeah.
by looking at their financial statements.
For sure.
See how their free cash flow been trending over a period.
Exactly. Is it growing, shrinking, staying the same?
Right.
That can tell you a lot about whether those dividends are sustainable.
Now, one thing I found interesting in the podcast excerpts
Yeah.
was this idea that comparing your dividend portfolio to the S&P 500
Uh-huh.
might not be the best benchmark.
Yeah. A lot of new investors make that mistake.
Really?
Yeah. If your strategy is all about generating income,
Okay.
using a broad market index that focuses on growth
Right.
might not give you an accurate picture.
So what's a better way to measure how well you're doing with dividend investing?
It depends on your goals, really.
Okay.
Are you going for high dividend growth,
Right.
consistent income, capital appreciation?
Yeah.
There are special dividend indices that track specific parts of the market.
I see.
You can even create your own benchmark
Oh, wow.
based on your own investments and style.
That's way more sophisticated
It is.
than just trying to beat the overall market.
Exactly. And it goes back to what we were saying before
Okay.
about understanding what you're trying to achieve.
Uh-huh.
What are you hoping to get out of your dividend investments?
Yeah.
Once you know that,
Right.
you can find the right way to measure your progress.
That makes a lot of sense.
Yeah.
But before we get too deep into benchmarks and tracking performance,
Okay.
let's switch gears a bit
Sure.
and talk about different types of dividend investors.
Okay.
The YouTube videos mention two main types,
Uh-huh.
people who want to live off their dividends
Right.
and those who are just looking for some extra income.
Yeah, to supplement their other income.
What are some of the key things those two groups should be thinking about?
Well, if you're trying to live off your dividends,
Yeah.
you need a portfolio that brings in enough to cover your expenses. Right. That takes a different approach. Yeah. Than someone who just wants a little extra cash. Okay. Or wants to reinvest those dividends for growth later on.
So someone who wants to live off dividends might go for higher yielding stocks,
Right.
even if they're not growing as fast.
Exactly.
While someone who just wants extra income might focus on companies with strong dividend growth, even if the starting yield is lower.
You got it.
And their risk tolerance might be different too.
Absolutely.
Someone who depends on dividends for their living
Yeah.
might not want to take as much risk.
Right. They need that stability.
But someone with more time
Yeah.
might be okay with more volatility
Uh-huh.
if it means potentially higher returns.
Exactly.
This is where things get really interesting.
I know, right?
It's not just about understanding dividends.
Yeah.
It's about understanding yourself
Mm-hmm.
and what you're trying to achieve.
Exactly. Once you're clear about that,
Yeah.
you can start building a portfolio that reflects your own situation and goals.
That's a great point.
Yeah.
And a perfect segue into our next topic,
What's that?
building a dividend portfolio.
All right, let's get into it.
But before we jump into that,
Yeah.
I think it's time for a quick break.
Sounds good.
We'll be back soon to explore different strategies for putting all this into action.
Looking forward to it. Welcome back. All right, so let's dive into the details of actually building a dividend portfolio.
Yeah, let's get into it. We talked about those examples from the YouTube videos, Coca-Cola and Visa.
Right.
Let's use those to explore some different approaches.
Sounds good. So Coca-Cola, that classic dividend aristocrat,
Uh-huh.
it's all about stability and a long history of paying dividends.
Right.
People like them for that steady income,
Yeah.
but their growth, with that dividend TAC-EGR under 5%,
Right.
might not be exciting enough for everyone.
Yeah. And their free cash flow growth is pretty modest too.
Right.
So those dividend increases might not get much bigger.
It's reliable, but not exactly a rocket ship.
Right. Some investors want more than that.
Exactly. And then you have Visa,
Yeah.
that dividend growth machine.
Uh-huh.
Their CAGR is over 17%, which is amazing.
Yeah, that's a huge.
But their starting yield is less than 1%.
So it's that trade-off again.
Exactly.
Give up some income now
Yeah.
for the chance to make a lot more later.
And their free cash flow growth is really strong.
Right.
Which means they have plenty of room to keep raising those dividends.
So it really comes down to
Yeah.
what you're looking for as an investor.
Exactly. What are your goals and how much risk are you comfortable with?
Are you looking for income now, or are you playing the long game?
Right. That's the key question.
Speaking of the long game,
Yeah.
one of the research papers mentioned dividend reinvestment as a powerful way to compound returns.
It's like a snowball rolling downhill.
Okay.
Instead of spending those dividends,
Right.
you use them to buy more shares,
I see.
which then creates even more dividends.
And so on and so on.
Exactly. Over time, it can really build up your wealth.
That makes sense.
Yeah.
But let's move beyond just individual stocks.
Okay.
What about things like REITs and dividend ETFs?
Diversification is super important,
Yeah.
and REITs are interesting for dividend income.
Okay. How so?
They invest in real estate that generates income,
Like what?
office buildings, shopping malls, apartments,
Oh, I see.
and they have to distribute most of their profits as dividends.
And dividend ETFs,
Yeah.
they give you instant diversification
They do.
because they hold a bunch of different dividend-paying stocks.
Right.
That makes managing your portfolio easier.
It does.
And it reduces risk.
Absolutely. And there are all sorts of different dividend ETFs
Oh, wow.
to match different investment styles.
So some focus on high yield,
Uh-huh.
others on dividend growth.
Right.
Some even target specific sectors or regions.
Exactly. So many
So
options.
you could build a really diverse dividend portfolio
Yeah.
without ever owning a single individual stock.
You could, but even with diversification,
Yeah,
you still need to know what's inside those ETFs.
That's true.
What companies do they hold? How are their financials doing?
You can't just trust an ETF blindly.
Nope. Just because it says dividend doesn't mean it's good.
Okay, now let's talk about something else I read in one of the podcast excerpts.
Okay.
They talked about classifying stocks based on their risk and growth potential.
Right, like putting them into different buckets.
Can you explain that a little more?
Sure, you might have a core bucket
Okay.
for your stable blue chip dividend payers.
Like Coca-Cola?
Yeah, maybe something like that. Those are your foundation stocks.
Right.
They provide steady income and some growth.
Okay.
Then you might have a growth bucket
Okay.
for those more dynamic companies.
Visa.
Right, the ones with higher potential for capital appreciation.
But also more volatility.
Exactly, and you might even have a speculative bucket.
A speculative bucket.
Yeah, for smaller companies with high dividend potential.
But they're riskier.
Exactly. It's like building a balanced meal.
I like that.
You need your protein, your veggies, and maybe a little dessert.
So by dividing your stocks into these categories,
Right.
you make sure you're not taking on too much of any one type of risk.
Exactly, and it helps you make sure your portfolio aligns with your overall strategy.
Now, I have a question that's been bugging me.
Okay, sure.
We've talked about finding undervalued companies,
Yeah.
but how do you actually figure out if a stock is a good deal?
Right.
The YouTube videos mention the dividend discount model.
Uh-huh.
Can you explain that in a way that's easy to understand?
Sure, think of it like buying a rental property.
Okay.
You'd look at how much rent you could collect each year, right?
Yeah, that's how you'd figure out if it's worth it.
Exactly. The dividend discount model does something similar.
Oh, I see.
It projects those future dividend payments
Okay.
and then discounts them back to today's dollars,
Okay.
taking into account things like interest rates and the company's growth rate.
So you're basically figuring out
Yeah.
how much those future dividends are worth to you right now.
Exactly. And if that value is higher than the current stock price,
Okay.
you might have found a bargain.
That makes sense, but those projections must be pretty complicated.
They can be, but there are other ways to value stocks, too.
Usually.
Yeah, there's more than one way to do it. Some investors look at things like the price-to-earnings ratio.
Price-to-earnings ratio?
Yeah, or the price-to-book ratio.
Okay.
These ratios compare the stock price to the company's earnings or assets.
I see.
So you can get a sense of whether the stock is overvalued or undervalued.
Compared to other companies in the same industry.
Right, so you're looking at the company from different angles to
Yeah.
get a complete picture of its worth.
But no single metric is perfect.
Exactly. Valuation is part art, part science. It takes judgment experience and a healthy dose of skepticism.
This has been so helpful.
We're glad to hear it.
We've covered so much.
We have.
Analyzing companies, building portfolios, even valuation methods.
Yeah, we've given our listeners a lot to think about.
I feel like we've given them a whole toolkit for navigating the world of dividend investing.
Absolutely. We've given them the knowledge and the tools to make informed decisions.
But before we wrap up,
Yeah.
there's one last thing I want to emphasize.
Remember, dividend investing, it's a journey, not a destination.
I like that it's not about finding like the perfect stock or timing the market perfectly.
It's about building a portfolio that makes sense for you,
Right.
for your goals, your risk tolerance, how long you plan to invest.
And it's about enjoying the process, right?
Yeah.
Seeing those dividends come in, knowing your money is working for you.
Absolutely. It's a great feeling, and it's something you can keep building on.
Yeah.
Your portfolio will change as your life changes, as you learn more,
Yeah.
and as the market throws you curveballs.
So where do our listeners go from here?
Good question.
They've got all this research we've talked about so much.
Yeah.
What are some actual steps they can take?
Okay, well, first I'd say think about what we've talked about today. What really stuck with you? What parts of dividend investing sound the most interesting?
So it's about figuring out your own style.
Yeah, your own approach to dividends.
Oh, man.
Once you have a better idea of what you want,
Right.
you can start narrowing down your research.
Okay.
Maybe you're interested in those high-growth companies like Visa. Or maybe you prefer something more stable like Coca-Cola.
And then you can start using those valuation methods we talked about.
Yeah, dig into those financial statements. Try out those dividend discount models.
Right. Compare different metrics to see if a company is really undervalued.
Don't be afraid to get your hands dirty. That's how you really learn.
And it's okay to start small.
Oh, yeah, for sure.
You don't have to build a huge portfolio overnight.
One step at a time.
One of the podcasts mentioned the psychology of investing,
Oh, yeah.
how fear and greed can mess with your decisions.
It's true. Our emotions can really get in the way.
But dividend investing can help with that.
Absolutely. When you're focused on the long term. Building that stream of passive income You're less likely to panic and sell everything when the market drops.
Right, or chase after those risky investments that everyone's talking about.
Exactly. It's about building that mental toughness.
That resilience
Yeah.
that helps you get through the tough times.
And remember, you don't have to do this alone.
That's true.
There are tons of resources out there.
Like what?
Books, websites, forums,
Mm-hmm.
even groups of dividend investors who share their knowledge and experiences.
Yeah, that sense of community can be so helpful.
It is, especially when you're just starting out.
Yeah, it's good to know other people have been there.
Right, and they're willing to help you.
And investing is a lifelong learning process, right?
Oh, yeah. The market's always changing. New companies are popping up all the time.
Right, and your own needs and goals will change too.
Exactly. So it's not about finding the perfect formula and then just coasting.
Yeah, you got to stay active.
You have to stay engaged, keep learning, and adapt as you go.
It's all about the journey.
It is enjoying the challenge and building a financial future that works for you, that aligns with your values.
That's a great way to put it.
Yeah.
Well, we've covered a lot today.
We have.
Explored all the ins and outs of dividend investing, debunked some common myths,
Hopefully.
and inspired our listeners to start their own investing journey.
I think so. With all the information we've shared today, they're in a great position to dive into that exciting world of dividend investing.
Yeah, as always, happy investing.